Good morning. Welcome to Bazaar Morning Call. I'm Sonia Shenoy, and with me is Nigel D'Souza as well as Lata Venkatesh. Well, we get back to trade after a holiday yesterday, and the Nifty actually snapped its 7-day gaining streak day before yesterday. And this morning, the cues are not that great in the sense global markets are a bit under pressure. Oil has gone up 3%, and it's an important day because you do have the F&O expiry as well. So we'll talk about all of that in greater detail. But for now, the SGX Nifty adjusted is indicating that not too much may change. We may still be in that very narrow trading range, and an up move today, a green tick is what it's suggesting. But globally, things have looked a bit sticky, especially as far as the technology stocks are concerned.
Only that. Sonia, good morning, and good morning to everybody, to you as well, Nigel.
Morning.
My bet is that from, I think, October 13, there is a huge rally in the market. A downside has been put because of the action of central bankers. Now, I'll just, I'm not saying my views. Look at how the market has behaved. I've got something called the bets of rate hike, which there is a group called the CME Fed Watch tool, which measures broker bets on rate hikes. Now, just look at the November rate hike bets from the FOMC meet, which is November 1st and 2nd. A 75 basis point rate hike the bets have fallen from 93.8 last week to 90.5 currently. And the bets of a 50 basis hike has slightly increased. Nobody is expecting a 50 basis, but just look at the marginal increase. Yeah. This is not the most important part because this 75 basis is a given. Look at the December bets, and that is what the market is really reacting to. 75 basis point hike was absolutely, next to, was as high as 81% last week. And that bets of a 75 basis in December has fallen to 35. 50 basis hike, the bets were only 18% because everybody was expecting 75 in December as well. Now the bets of a 50 have gone to nearly 60%. So market basically is pivoted. Whether the Fed is pivoted or not, market is pivoted to a Fed slowdown in the pace of rate hikes. Yeah. Now, the best evidence of this, or increasing evidence of this is Canada. Canada Central Bank yesterday was widely expected to give a 75 basis hike. They gave only 50. The aggression of the rate hike cycle also was started by Canada. They surprised everyone 6 months back, and now they're surprising on the downside. My bet would be the UK BOE and the UK government resigning because the bond market could not withstand that much of rate hikes is a sure short reason why all central banks have realized that yes, you have to raise rates to kill inflation, but you can't kill financial stability. You have to do it slowly so that the financial markets are able to take. That, for me, is the biggest bet that the market is moving on. From October 13 is a near, all markets, ours, the Wall Street indices, all of them are showing a gentle, the bottom is clearly been protected for now. And my sense is that, the next time people will veer back to, oh no, the Fed may hike more than we think, will happen only if the jobs data is ultra strong or the US CPI numbers come in ultra strong. All those are at least 2-3 weeks away. Okay. So for the moment, I think the rally is safe till at least November 5th.
And in that context, right, the SGX Nifty, if you adjust for the rates, yesterday since we were shut, it's up 240 points right now. So a big gap up opening is what perhaps is coming. Only niggling worry, right now the SGX Nifty I think is at 17,894 and the Nifty futures close was 17,654. So a big up move is what, the SGX is suggesting for now. The only thing is across the globe, the IT numbers in the US were a bit disappointing. So that could have maybe a rub-off impact on our own IT index, you never know. But it didn't look good across the board. Facebook was down about 18%. Alphabet, the revenue slowed down quite a bit, just a 6% growth versus 41% growth a year earlier. And Alphabet says that they will significantly decrease their headcount growth. So there is, one piece which is not working for sure, which is the tech piece over there. All eyes will, of course, be on the data in the sense there's the weekly initial jobless claims, there's the September durable goods orders, but that's about what's happening in the US. In our own markets, it's been all guns blazing. In this series so far, the Nifty is up 900 points and the bulls have had a very, very firm grip on the market. There's a strong support at the 50-day moving average, which is 17,500. And so far, this market has been trading in a 300-point band between 17,500 and 17,800. Today, we may get to the upper end of the band, as the SGX is suggesting, but let's see whether we find any resistance there or whether we, conquer that level. But for now, I mean, the bulls have it firm, the grip, they've tightened it, and looks like that's something that can continue.
Well, that's right. Sonia, it's going to be a tricky start, actually, because the Nifty is going to catch up with the global cues, as you mentioned. And, adjusted, we're likely to see a 200, 250-point bump up. That's going to be tricky for the bulls because you're getting a good gap up, maybe taking some money off the table may not be such a bad thing. The dollar index at around 110, for me, that's one of the biggest positives. The only problem is that's partly offset because crude was moving towards around $90 per barrel. That's perked up yet again, moved to around that $95 per barrel odd mark. It's monthly expiry, so things will get volatile in the second half of trade, but it's been a very, very good series, as the numbers indicate, both on the Nifty and the Nifty Bank. The uptrend will be intact till the 50 DMA is held out in the near term. That's around 17,500. What's been impressive for the last few days, and the reason the Nifty has moved higher, is the institution number. That's the FI and the DI number put it together. We have a net inflow that's been coming in, close to on 800 or 900 crores odd for 7 straight sessions, and I like that. What are the FIs doing in the F&O market though? The short positioning has come down. It was at around 85% a couple of weeks back. That's come down to around 66%, though they continue to remain net short. The 17,800, 17,850 odd mark could be a bit of a resistance, and I say that because the FIs wrote calls yet again, after a while, close to on 25,000 contracts. And on the 17,700, 17,800 calls, close to around 40 lakh shares were added out there. So some signs of writing out there. How do you approach trade then? The Nifty is likely to open up near the resistance zone. I would think that taking some money off the table would be pretty good news because you'll get a bit of an intraday dip. Sustaining over the 17,850, that's going to be crucial. And if you see those calls that were written, they start getting unwinded, then we are headed towards that 18,000 odd mark. So keep an eye out on the highs of the day the last couple of days. The 50 DMA crucial on the downside, and the Nifty Bank didn't participate on Tuesday. Let's see whether or not it gets back to its winning ways. For starters, SGX Nifty is indicating a big gap up.
Okay. Thanks for that, Nigel. That's even more useful than looking at a longer-term trend. But Sonia, you spoke about slowdown in the tech stocks. You have some initial numbers on auto sales.
In fact,
during the festive season.
Tuesday is when the auto stocks had a big up move as well. And my colleague Parikshit put out some reports. These are, of course, source-based reports on how the retail sales this festive season has been very good, especially in the passenger sales. There's been a growth of almost 40% that we've seen in, for names like Maruti. But that is the passenger car space, especially the SUV segment, which has done very well. And in that context, Maruti comes out with their numbers tomorrow. So, all eyes will be on that. The best sellers, Alto, Wagoner, Baleno, have all done very well this time around in terms of retail sales. The problem really is in the two-wheeler sales, where there has been entry-level two-wheelers that are under stress. In the mass market segment, there's been no recovery over there. So the festive season has been a bit of a mixed bag. But I think the fact that passenger vehicle sales have done very well, there's a 40% growth, is something that the street will definitely like. So I'm keeping my eye out on the auto stocks today.
Oh, yes. Actually, later on today, we are going to, try and discuss what we can about the early trends in the festive sales that will come up for you after 10 a.m. On Bazaar itself. I just want to add one word, the risk on, which is there, usually indicates when people don't want to buy the dollar. And the dollar index has moved below 110. It's 109 and change. And as a result, the rupee, which gets traded in the NDF market, is now showing that it will open below 82. Oh, wow. It will be 81.90 and change. So that again is an indication of risk on. And finally, bond yields. US bond yields were 4.33. They've come down to almost 4%. So we should expect Indian bond yields also to open lower, which is Bank Nifty positive. The index that has been leading from the front. So there you are.
Okay, but a big day today. The SGX Nifty, at least for starters, is suggesting a big gap up opening, up about 240 odd points. But without wasting any time, let's kickstart the show. We have so much to talk about. And first up, Sanjay Mookim of JP Morgan says that costs for the central government are rising faster than revenues and do not yet show up in spending trends. He says there is very little room for the central government to accelerate spending in the second half of the fiscal. States, on the other hand, he says, have spent well below budget so far and could potentially accelerate the capex. This impulse, if any, will likely be moderated by the capacity issues and different incentives across 29 governments. He does not see any scope for a policy surprise, monetary or fiscal in India, and remains defensively positioned. JP Morgan is overweight banks, staple and healthcare.
Okay, banks. No surprise over there, isn't it? Let's get your money market views on that note. Parul with us now. Standard Chartered Bank says the rupee traded below 83 for a large part of the week, owing to local banks selling, even as dollar index and oil prices stayed range bound. She expects 82.50 to be the support and 83.50 to be the resistance level, with market picking cues from broader global risk appetite and local banks' dollar selling pattern.
Okay, and on the bonds, Parul says that the rupee rates rallied early this week on softer rates globally. She expects the 10-year benchmark bond yield to remain in a range of 7.35 to 7.55%, largely following the move in the dollar INR, global rates and commodity prices.
Well, we have lots of stock-specific action, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Dabur, Crompton, Z, Century Textiles and IIFL Finance. They are stocks on the back of positive news flow, while we have Gland Pharma, Glenmark, Lupin, Chennai Petro, as well as PCBL. They are stocks that are likely to open up in the red.
Okay, thanks for that. We'll come to that. But before that, let's just understand the global backdrop. A risk-on rally appears to have begun from mid-October. We have Arvind Sanger, Managing Partner, Geosphere Capital Management, joining us all the way from the US. Thank you very much, Arvind, as always, for staying up for us. A very happy Diwali to you. I assume you are still celebrating it over there. There is Diwali in the equity markets all over. Do you think this kind of a rally has legs? Call it bear market rally, call it start of a bull run, but it has legs, you think?
Yes, I think you were, first of all, thank you for the Diwali wishes. Hope everybody there had a great Diwali. And yes, this bull market has legs because, there's an old saying, when the cat is away, the mice will play. And as I think you earlier highlighted, there is no data that can upset the apple cart meaningfully between now and, this first Fed meeting, 75 basis points in November, early November is given. But after that, I think, for the December meeting, people can live in hope. But the other thing that has happened is that the earnings season started off strong for the US, but now you're seeing some significant market leaders like Google, Alphabet, and you had Microsoft disappoint slightly. And you have, tomorrow, US time, you have Amazon coming. Meta was a big disappointment. So we have to keep an eye on that, whether that upsets the bull market or that's just that it takes the tech market leadership away from tech and other sectors do better. I think I'm more inclined to believe the latter than the former. But I think the real issue is, where is inflation going and how quickly is it coming off? And I think that's an open question. None of us knows the answer. But for the short term, I think the bull market has legs because the hope is that inflation is going to show signs of moderation.
Okay, the bull market has legs. You've been saying this for a while, Arvind, and the Indian markets are, less than 4% away from their 52-week highs. Is this still a good time to be putting money to work in India, or has one missed the bus?
I think selectively there are still stocks that are lagging. I mean, obviously we've talked in the past about the Indian IT names. Those have lagged a lot, but that's not necessarily where I'm putting money to work. The bank stocks have obviously had big moves, but I think there are still selective opportunities in the banking space because they're not from a valuation standpoint. If this is a long-term sustained earnings and growth cycle in India that has several years to go, which I think it does, then banks are certainly not at valuations, at least some of them, where we can say that they're already fully priced all the good news. So therefore, I look at valuations rather than indices to see where individual stocks are, and I think there are individual pockets where valuations certainly are not at anywhere near the kinds of levels that you would say that the bull market is running out of legs.
Okay, all right. Hi, Arvind. Good morning. Arvind, I wanted to ask you, Lata was just putting out some data that maybe the Fed doesn't do 275 basis points hikes. And that was something that the street was factoring in, say, a couple of weeks back. What's your sense? In 2022, whatever's left, do we get 150 or do you think 125 basis points is more likely? And also just wanted to confirm, I remember the last time you joined and you were telling us that this is likely to be a relief rally in a bear market. Now you think that's slowly trending towards a bullish market?
So let me take the first question first. Look, the Fed has already raised rates 3 times 75 basis points and is about to do a fourth 75 basis points move. That's the fastest ever speed of increase in terms of how quickly they've gone up rates. So therefore, it is not, completely, out of the question or unreasonable for them to do only 50 basis points. It sounds like a big relief. But that means that they've done, 475 basis points, that's 350 basis points in 5 meetings is pretty dramatic. And I do think that it makes sense for the Fed at some point to start going a little slower just to see, because the effect of their rate increases always comes with a lag. It's not instantaneous. So then it comes to your second question, is this the start of a bull market or a bear market rally? The reason I still believe that there's a pretty good chance that this is a bear market rally, although, they are probably more fun than bull markets because bull markets go more gradually. Bear market rallies are much more rapid. But the reason I still think this is a bear market rally is because I do believe that the impact of all these rate increases will come in 2023 in terms of economic slowdown and probably a recession. And I don't think that inflation is going to be quite as fleeting and as easily licked as the bulls would hope for. Because, oil is 95. I think it's headed past 100 again, especially if China starts to, at some point in 23, take off the foot off its, zero COVID strategy. So all of those factors give us a little more caution that I do not think we can get past this inflation event without meaningful pain to the US and global economies, which means a recession, which means the market will probably retest its lows from earlier a few months ago.
Well, Arvind, as a last question, let me request you to develop that point. Sundar Pichai, among the other things he said about Alphabet, he also said that cloud-related earnings are not much. Now, Indian IT companies have been betting on their investment in cloud, and that, is going to give them earnings for the next few quarters, even if fresh orders slow down. They have so much of backlog. Are you getting a fear that even Indian IT companies may start hiring less? And that can have a compounding impact on consumption. So is there any won't buy stocks in India?
I think if the Indian IT companies do feel some of the effect, because the tech companies in the US are clearly feeling, impact of slower ad sales and just slower, revenue growth. And therefore that is going to feed through into, some, but there is a secular trend. Look, there will be cyclical short-term headwinds. It's not the end of any cycle, but it's just clearly cyclical headwinds for the tech companies. But, the digitization mega theme is alive. Yeah. But I think within that mega theme, there is clearly headwinds. And therefore, I think that'll have some impact on IT companies in India. But I'm not sure if that derails the entire Indian cycle, because it's no longer IT alone that is leading it.
All right, Arvind, we'll leave it at that. Thanks a lot for joining in. Have a great week ahead. And once again, happy Diwali to you. Thanks for being with us on CNBC-TV18. And that's Arvind Sang of Geosphere Capital. Let's do one thing. Let's take a quick break. The SGX Nifty is suggesting a big gap-up opening. Let's see how it goes from there. Our entire team will be with us to help us with the top 10 list of stocks in just a bit. Welcome back to Bazaar Morning Call. Well, the market for today is indicating a big gap up opening adjusted to the close that we saw on Tuesday. But our entire team is joining in now to tell us about all the stocks that are in the news this morning. So let's get straight to that. Mangalam joins in first up to talk about Dabur. It's spicing up its journey with an acquisition of Bazaar masala, something that perhaps either we have used or our mothers have used when we were children. So very familiar there. But Mangalam, go ahead.
Whether you use Bazaar masala or not, you've definitely heard their ad jingle, and that's something that speaks about the brand that Bazaar is. So Dabur actually had a boringly inline quarter, but it spiced it up, like you said, with the acquisition. They've also announced a 326 crore capex for toothpaste and juices business, but it was Bazaar that really took all the highlights away. As far as the numbers are concerned, 2986 crores on the top line, absolutely in line with expectations. 600 crores on the EBITDA. The street was working with 602 crores and 490 crores on the profit, but the street was working with 490 crores itself. 1% volume growth. The street was working with 0 to 1%. And now to the spicier bit. They've acquired 51% stake in Bazaar Masala for 587 crores, valuing the company a little over 1,100 odd crores, and the remaining 49% will be acquired over the next 5 years. The deal is done at just shy of 5 times FY23 price to sales and about 20 times EV to EBITDA, which means that Bazaar's derived FY23 revenues is around 256 crores and margins at around 23%. Importantly, 82% of their sales coming from blended spices, which is basically blended masalas, which are high gross margin products, and it's a 25,000 crore category that Dabur has entered into. So apart from the valuations, the important thing to watch out for is that it's a strong brand that they've acquired. How much can they scale it up using their own distribution platform, and what it does for them is something that is crucial to watch.
Okay, all right. Mangalam, thanks for that. Well, hop across to Ekta. She's here to tell us about Gland Pharma's numbers. Ekta?
Thanks for that. Well, yes, for Gland Pharma, overall, there was a Q-on-Q recovery that the company reported, but it still missed expectations. So the revenue was down 3%. The street was anticipating a 9% decline. The margins disappointed because that came in at 28.4%. The street was anticipating around 31-32%, and the profit 241 crores versus estimates of around 250 odd crores. Now the core markets, which is basically 75% of their business, was up 3% on a year-on-year basis, so it was better than the performance last quarter. And India continued to decline. It was down over 70% in the previous quarter. It was down 40% this quarter. The company did attribute it to reasons such as supply disruptions as well as a high COVID-19 base. Now the street is not convinced. For example, Incred wrote on Gland Pharma last night, they reduced the FY23 to FY25 core earnings by 21 to 23%. They maintain a hold rating, but they've lowered their target price on the stock. What could probably support Gland Pharma is the net cash, which is still strong, 3,800 odd crores. The stock is already down 45% from its 52-week high, trading at around 21 times FY24 estimated PE.
Okay, stock is halved from its 52-week high. Thanks a lot, Ekta, for that. But let's go across to Vahishta now. She's tracking Crompton this morning. Vahishta, over to you.
Hi, thanks for that, Sonia. Crompton Greaves numbers have not been very good. In fact, the numbers have been lower than the CNBC-TV18 poll. The revenues came in at 1,700 crores, while the EBITDA margins have lowered to 11.4% in this quarter versus 15.5% on a year-on-year basis. The electric consumer durables division revenues were down 3%, which was anyways on the expected lines. Fans business was impacted due to slow channel inventory. However, there has been some weakness in the lighting products division, whose revenues are down 7% in this quarter. Now, of this, the conventional lighting business declined by 35%, while B2C LED business was flat. The company has explicitly highlighted the high retail inflation is pinching the consumers' pockets, and hence can expect some selling pressure in the stock today.
Point taken, Vahishta. Dabur is saying their volume is just 0 to 1%, and Crompton is saying that inflation is pinching consumers. There is a common theme there. But tell us about Zee now. They're tackling the Competition Commission's point of view by selling off some channels?
Yeah, that's right. Sony and Zee have voluntarily agreed to sell 3 Hindi channels, which includes Big Magic, Zee Action and Zee Classic. And this is to address the anti-competition concerns which are arising out of the merger deal. Now, at present, these channels do not contribute a lot to Zee or their revenues. So on the face of it, looks like Zee and Sony have got the CCI merger nod without having to lose much. So some positive news.
Hey, thanks a lot for that. Well, Ekta is back with us to talk about Glenmark Pharma and Lupin and why you should be watching out for those stocks. Ekta, over to you.
Thanks for that. Well, yes, for Glenmark, it's in fact a disappointing piece of news, and it's disappointing for the industry as well, because their Baddi facility has received an import alert from the US FDA. And that means that any kind of new approvals will not be allowed from this particular facility. Now, remember that this plant was already under the US FDA scanner because they already have a warning letter which was issued to them in 2019. After that, in June, they were issued 6 observations, which is just June 2022. And in September 2022, the US FDA said that they continue to have an official action indicated status maintained on this particular facility, which means that the probability of an escalation is high. So the street was anticipating it, but an import alert is definitely disappointing. It's 1 to 2% of their FY22 US sales, so the impact on revenue might not be as much as it is in terms of sentiment. For Lupin, again, US FDA issues there. We have accessed the Form 43, which was issued to the biotech facility in Pune, and they've received 18 observations from the US FDA. They have spoken about aseptic processing, monitoring, lack of adequate product evaluation, remedial action on actionable microbial contamination. So these are issues which are going to take a longer period of time for Lupin to resolve. So expect the stock to probably be in the red on account of this.
Okay, thanks for that. A bit of red for some of the pharma stocks. Sonal, you have a bunch of other results that you're going to apprise us of?
Yes, there are 4 of them. Lata, let me start with Chennai Petroleum. Well, GRMs have fallen substantially, and that is something we can see in Chennai Petro's results as well. Revenue decline of 16%, EBITDA down 93%. We have margins at 1.2% versus 14.7%, leading to a profit decline of 99%. GRMs for the company, they came in at $4.5 per barrel versus $25 per barrel on a sequential basis. Remember, Singapore GRMs had fallen sharply from the peak, and that is something we are seeing here as well. On the flip side, IIFL Finance, good set of numbers. Lower cost is something that aided earnings for the company this time around. NII was up 30% on a YY basis. Interest income up 6% sequentially, and interest expense was down on a quarter-on-quarter basis. Net interest margins on book at 8.1%. That is in the first half, which compares with 6.7% on a YY basis. The fourth number that I'm watching out for is Century Textiles. Reported good set of numbers with an EBITDA margin expansion of 400 basis points. That is in a tough environment, so expect that stock to do well in trade today. We also have PCBL, which reported good set of numbers. We saw PCBL seeing a margin decline though of around 600 basis points, and profits down by 4%. So despite the revenue upside that we are seeing, this stock should see some red in trade today.
Okay, that's Philips Carbon Black Limited, PCBL. All right, let's take a quick recap of all our top stocks and focus stocks with positive news flow. There's Dabur, Crompton, Z, Century Textiles and IIFL Finance. While stocks with negative news flow, Gland Pharma, Glenmark Pharma, Lupin, Chennai Petro as well as PCBL. But let's take a quick look at what's happening in the world of crude, because oil prices have gone up 3%. Brent is now back at $96 a barrel. Manisha Gupta, our commodities editor, is here to give us a quick roundup of the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, the weakness in US dollar is one factor, but $96 per barrel also has come in on the back of the fact that you're looking at record US crude exports at 5.1 million barrels per day. OPEC and allies will effectively cut 2 million barrels per day from the 1st of November. Another thing is that European Union and US are likely to, while settle for an easy price cap on Russia oil, but the European Union from 5th of December is also looking to ban Russian oil imports and restrict Russia's shippers from global shipping. So markets are looking at a lot of supply concerns. And on the other side, you're looking at Chinese demand continuing to get better, especially in the month of October, after 4 months of decline until September. So a lot of supportive factors here, and the markets do believe that we'll see $100 faster than 90 in this quarter itself.
Okay. Thank you very much for that, Manisha. That would also be an important macro for us, even if the dollar is working in our favor. And the fact that crude is still inching up above 95 would be something that equity and bond markets will take note of. Take a quick break, and thereafter we're going to connect with Sanjeev Bhasin of IIFL Securities to analyze some of the stocks that are on our radar. We'll also be joined by Mitesh Thakkar and Sudarshan Sukhani thereafter for technical trades.
Welcome back. Well, the SGX 50 is indicating a big gap up. You need to adjust both those two. That's the SGX 50 and compare it with the Nifty futures as well. But plenty of stocks to discuss, and we have Sanjeev Bhasin, Director at IIFL Securities, who joins us now on the show. Hi, Sanjeev. Morning. Thanks so much for joining in, and wishing you a very happy Diwali as well. We almost went to that target of around 18,000 odd, and you said that the second half of October will be even better. So on the Nifty first, Sanjeev, They are still sticking to that, 18,000 in the next few days?
Yeah, good morning, Nigel. Wish you and everyone on the panel and all your viewers a very, very happy Diwali. 18,000 is coming today, Nigel. I told you it's coming on Diwali or Diwali Eve. So where is Sonia? Tell her 18,000
I'm
is
right
there
here.
today.
I'm right here.
Well, I hope she remembers that I was at 17,000. She was asking me. I told you Diwali will be close at 18 or maybe beyond that. So 18 is coming today. Let the bears look for cover on wherever they want to. Okay. Bond yields are at a 1 month low. Dollar has weakened. Emerging markets are in a sweet spot, and bank results are beating all expectation. So fingers crossed, 18,000 expiry today.
Okay, yes, Sanjeev, hats off to you. You did mention that 18,000 level is coming before you know it. You know, these results have looked really spectacular. I mean, especially from banks like, right, whether it's ICICI, Axis Bank. Is the time come to put some more money here, or do you think that most of the good news is in the price?
So, Sonia, take it with a pinch of salt. You named two of the large caps, but you forgot to mention Can Bank, State Bank, Bank of Baroda, Union Bank, and PNB. They are up 40% in a month. And you know, Canara Bank results, whatever parameter you take for a Union Bank, these are so under-owned that they can rise 20% still and look cheap. So I think that banks are in a very sweet spot. Their liability franchise has played out well. And I think credit is expanding at a humongous pace. So, you know, there was this fear that there will be, less demand and inflation. All those worries still exist. But in the Indian context, just the sheer weight of reopening and getting back to work or getting back to pleasure is humongous. If you went to airports, you went to smaller cities, it's unimaginable. So I think the best is yet to come. The Fed pivot may be round the corner. There will be a global rally. On the 8th of November, the Republicans are slated to win the midterm Senate polls. So I can go on because I'm bullish.
Okay, Sanjeev, good morning. Yeah, many congratulations for calling that right. But what do you climb on other than banks, and what do you stay out?
Yeah, morning, Lata. Wish you a very, very happy Diwali. And so Lata, look, the proverbial, say, cement counters which have underperformed, Ultratech, which we've been very bullish. We think that the worst of coke prices and the unforeseen monsoon may be behind. Construction is in a very sweet spot. DLF has reduced debt at the highest pace ever. So real estate, cement go hand in hand as ancillaries. Autos are showing you see the numbers. Maruti will, my office is just next to the Maruti entry gate. And I can tell you, Maruti will sell 35 lakh cars in 2023-24. That's a far cry from what most people were saying, because the orders and the amount of waiting is humongous. Now, similar is the case with consumer. You can take it with a pinch of salt that inflation fears will be biting the rural side. And we know that two-wheelers have underperformed. But there is a whole host. Not to forget, last but not least, the capital goods stocks. The ABB, Siemens, Cummins are hitting new highs, which is telling me that capex, which has not been there for the last 10 years, is now on the annual. And some of these large players like Thermax and the names which I took could be very big beneficiaries of this new spate of capex.
Okay, all right. Sanjeev, before we go on, I wanted to wish you a belated happy birthday. I believe you celebrated your birthday a couple of days ago, so hope it was a good one. And you're giving us quite a few treats for our viewers, so we're going to keep an eye out on those stocks as well, Sanjeev. Well,
thank you, Nigel. Thank you for the warm wishes. And yes, your party is due at Punjab Da Tadka whenever you and the team are here. The best butter chicken. And let me tell you, just turned 60 but feeling 30. and there's way to go.
Amazing. Wish you well, Sanjeev. Talking about the butter chicken, you're spicing things up. But Dabur, they spice things up actually. They report an inline set of numbers, but they're making a foray into a new market. What's your view on the stock?
So, see, Dabur has been a quiet outperformer. It has not done much, maybe on the up or the downside, but it has been a very steady performer. And yes, margins have been hit by most of the large players. But, look at the foray of products which they are into. This new acquisition, I've not read much about that, but for a cash-rich company which generates, almost 10% of its overseas on this, would be a very, very good, play for them to get into it. So it's telling you that most large FMCG stocks are taking it with a pinch of salt that maybe inflation fears are there for real. But they have the pricing powers, and if we see some more weakness on palm oil and other commodities, that could be the tailwind for this. So we think Dabur is a relative outperformer. It has been a very steady stock, and you could see at least a 15% upside if the index is going to go to new highs.
Okay, well, Sanjeev, you do stay on because I have many more questions for you. Also want to ask your thoughts on IT stocks because some of them have rallied 10-12% this month already, like HCL Tech. But just stay on for a bit because we have to take some technical calls from our experts as well. We have Mitesh Thakkar and Sudarshan Sukhani who are joining in now. Gentlemen, morning to both of you. Sudarshan, looks like a gap-up opening is coming as per what the SGX is suggesting. Do you think, I mean, we're just about 3-4% away from 52-week highs. Do you think it's coming sooner than we think? And what is the expectation purely for today?
Good morning, Sonia. See, the day before when the markets were open, I had said that the trend is clearly up and every small minor intraday dip should be bought into. Now that view continues. See, while the markets are going up, they will have small intraday corrections, which is what we had 2 days ago, day before. But the trend is what we want to capture. So the trade today, I'll answer first today's trade. The trade today is that in this gap up, it will be very difficult to capture an intraday move, but any small dip, any small consolidation, and you get these during the day, should be used to develop a buying long position, which can be sold into after a couple of days or 3 days. So the intraday trade is missing because of the gap up, but the positional trade continues to be long on the Nifty as well as on the Bank Nifty. Will we see new highs? The chances are very strong. I explained to you that seasonally, November, December and January are very good months, so new highs are not very far away.
Oh, that's good to hear, Sudarshan. Thanks for that. We'll come back to you for your stocks. Mitesh, what's the index strategy today?
Morning, Lata. We've been maintaining that, the uptrend is there, and we have looked at targets of 17,800, 850, and then 18,100. We kind of reversed last week from the highs of 17,800, a couple of days back from the highs of 17,800 plus. And I think that still remains a formidable challenge, though I think eventually we expect it to be crossed and the index could head towards 18,100. So today, as we open towards 17,800 plus levels, the first reaction will be to take some profits, see if we're getting past 17,850, then get back into long for targets of 18,100.
Okay, how about individual stocks then? What are you looking at, Mitesh?
Yeah. So I have more of buy calls and one sell call on HUL. HUL, I think clearly after numbers has been showing that weakness. So it's a sell on a mild bounce back. Let's say if you get a bounce around 25.20, take a 30-point stop from there, 25.50, and look for targets of 24.60. But more calls on the buy side are HDFC AMC, buy with a stop at 20.34, targets of 21.30 here. HAL, that's a buy with a stop below 24.85 for a first target of 25.60. And Amara Raja Batteries is a buy with a stop below 500 for targets of 530.
Okay. All right. Sudarshan, what about you? What are your picks?
Well, L&T is a buying opportunity. The stock had a 2-week consolidation. It broke out yesterday, which means the day when we traded. And I think there's more upside here. That's a buying idea with a stop under 1891. Persistent is a buy. Persistent has been in a strong uptrend and it had a very big day 2 days ago. So I think that tells us that the uptrend is now not only intact but willing to go much higher. Buy with a stop under 3,700. M&M has moved out of a small consolidation, about a month-long consolidation. Any breakout from a consolidation represents an re-emergence of the uptrend. So that's a buy with a stop under 1240. I have only buying ideas today. And finally, Muthoot Finance was on a consolidation for 3 months and it's now coming out of that. Now, this is a slightly higher risk trade because it's not yet broken out, but it's worth taking that risk. So it's a buying idea with a stop under 1,025.
Sudarshan, I'm a little surprised that there are no PSU bank stocks in either of your lists. They have been the toast of the market for the month and for the week, one day of the week when we traded. You don't want to trade any of those?
No, the idea, Lata, is to look at stocks that may be willing to go higher now.
Okay.
So it's not necessary that PSUs may do that. They may pause for a few days. That's why they are not in my list.
It's a big move in many of these stocks.
Canada, BOB,
Absolutely.
PNB, BOI, everything.
It's a big move. They're not just in PSU banks. But Sanjeev Bhasin is still with us. Sanjeev, 2 pockets. So let me start one by one. On IT, you know, some of these stocks have had a good run. I mean, in the month of October, HCL Tech, Infosys all up 10-12%. You like any of these names?
Yes, Sonia. So 3 of these have been our top picks as a SIP, as an investment, but for much lower levels, and we've stood our ground. HCL Tech, Tech Mahindra, and Persistent. All 3 have been outperformers in the recent past, but we still think there is room on the upside given the valuation discount to the large cap and the type of guidance which HCL Tech and Persistent have given. I mean, they've been the most positive amongst the tech pack. So we are looking at these 3 stocks are on our buy list on any decline. And as a disclosure, all these 3 are under our coverage as buys from the last 2-3 months.
Oh, okay, all right. Sanjeev, you know, today metals could do well because the dollar index has cooled off. So LME, you know, some of those prices, aluminium in fact is moving higher because there is reports that suggest that maybe Russia gets banned again with regard to the aluminium produced. What's your take on this space? And would you go with the ferrous or the non-ferrous stocks?
Correct. So, Nigel, if you recall last week also when I had said that the dollar is very close to topping out, and I put my neck out that we are headed to 106 before we, you know, see the next round. You've seen all fingers crossed. The new UK Prime Minister. I think it's a proud moment that an Indian origin is back, and he's you know a professional banker by knots. And I think the pound has had a very good rally.
Yeah.
So I think globally we've seen the Bank of Canada raise rates by 0.5 instead of 0.75. If the Fed pivot works in November, then the dollar is headed lower. And our toast of the pick is Jindal Steel. Jindal Steel has reduced debt in the maximum way. They are looking at putting on new capex, and Jindal Steel could be a real outperformer. Aside from that, we like both Hindalco, Tata Steel, and Vedanta. So if you bought a basket of them or you bought a fund which has exposure to the metal side, that would stand handy. But please do a SIP because they are a volatile, a basket of stocks given their lineage with the dollar. But if the dollar is topping out, you could easily see 10% upsides in most of these counters.
Okay, that's very helpful advice. What should you play if the rupee strengthens, and metals would be one of them. One of the reasons why Sanjeev is recommending metals. Do stay on, Sanjeev. We have to take a quick break. But Sanjeev was talking about banks. Everyone's talking about banks. So to understand, to get the pulse of the sector, we have with us the biggest banker in the country, Mr. Dinesh Kumar Khara, Chairman of State Bank, joining us in a minute after this break. Welcome back, and as promised, we are going to talk about the banking space now. The Reserve Bank of India numbers that come every Friday show that loan growth has surged to a 10-year high. At 17.9%, loan growth is the best since 2012. Abhishek, our expert, informs us. Separately, the excess liquidity in the interbank market has fallen to 2-year lows. Now, banks, at least last week, were borrowing 50,000 crore rupees from the Reserve Bank's MSF window. So tight is the liquidity. Does this mean deposit rates are headed higher? This will have an impact on margins, will it? To discuss the health of the banking sector, we have with us Dinesh Kumar Khara, Chairman at State Bank of India. Good morning, Mr. Khara. And we will state up front that we are not allowed to ask SBI questions since you are on a silent period. We take that point. But, this tightness in the system, the Reserve Bank, if it wants, can liquefy it more, but they are not. So clearly deposit rates are headed higher.
Good morning, Lata. First of all, thank you very much for having me on your show.
Oh, and Diwali greetings to you, sir. Sorry.
Diwali greetings to you. Diwali greetings to you and to your viewers also. Let this Samvat be very, very prosperous for everybody. This is what we would like to wish and pray. Well, of course, Lata, what you mentioned in terms of deposits and the likely impact on the interest rates, etc. Well, I think it's a very, very dynamic situation. What we are observing is that there's a decent credit growth, which you also just mentioned, and of course, to fund that kind of a credit growth, deposits are, of course, very, very critical component. But the fact remains that during the pandemic, there was a huge liquidity which was available with the system, and that got deployed into various investment instruments. So I think it will have some kind of a readjustment, reallocation, or recalibration among the assets where the deposit got deployed. And certainly, yes, of course, the kind of growth which you are observing, it is almost about 18% kind of a deposit, credit growth, and about 9% kind of a deposit growth is something which you are observing. But I also believe that, there is some amount of unspent money from the government also. And the kind of buoyancy which we have seen in the GST collections. So that also gives us some kind of a confidence that maybe in the remaining part of the current year, we will get to see some money being spent by the government, which will also bring in more liquidity in the system. Yes, of course, currently the banks are increasing interest rates depending upon their ALM situations. But yes, I think it's a very positive sign. If at all the credit is growing, that's a very clear reflection that the economy is on the upswing.
No, sir, I just wanted to ask you about deposit rates. How much do you expect it to grow? I take your point that government will spend at the end of the month and that money will come. There is still 3 lakh crores unspent money with the government. I take your point that some large banks like yours could be having, extra in SLR and CRR, and y'all may not have to. But look at the system. That picture went viral of a Canara Bank employee actually hawking deposits 666 or something like that on the street. So give us an idea how much deposit rates can go up, say, in the quarter.
Well, of course, it's a bit of a dynamic situation. For the scheduled commercial bank, I would like to give you only one data point, which is in the current year we have seen a growth of about 8 trillion, whereas last year it was around the same time it was just about 6 trillion. So deposits are, in the system, seems to have some kind of a stress for the deposits, but nevertheless, the growth is very much there. So that's why I said that, of course, RBI also intervenes through the variable reverse repo rate auctions, etc. So those kind of things will happen. Maybe as against, there would be, maybe RBI will continue with the 14 days variable reverse repo rate auctions as against 28 days. So I think various kind of tools are available, which will certainly help. And also, what we have also seen is that there's an upsurge in the CDs, and CPs are not as much being subscribed to. So that is the other aspect which you have observed. Because in the current year, in the first half itself, about 3 trillion worth of CDs have been issued by the banking system. So I think this is, of course, as I mentioned, there will be recalibration in the various classes of assets and also various instruments through which the deposits are being raised.
Okay.
That will happen.
Okay. Mr. Khara, good morning. This is Sonia here. Happy Diwali to you. Just coming back to this credit growth, right, at 18% as of October, this is the highest that we've seen in the last 10 years. Wanted to understand from you, since there is a material change in the demand environment, between these pockets, whether it is retail, SME, which was anyway growing, corporate has also now come back in a big way. Where do you see the maximum amount of traction? And do you think the 17-18% credit growth is sustainable?
Actually, what has happened is that last 2 years, because of COVID, there was, of course, some amount of, the demand from the consumer was not perhaps as strong. So domestic demand is something which is huge, and moreover consumer segment. The cars, the auto sales have rebounded. The real estate sales are on the rise, despite the fact that the home loans are on the upside. Contact and intensive hospitality services are experiencing a bounce back. So this is something which is happening. Apart from that, even in the corporate sector also, what we are observing is, because the capacity utilization has gone up to about 75%, even the working capital utilization has improved, and even working capital availment has also improved. So I would say that it is, when it comes to corporate demand, it is also partly attributed to the fact that the international rates are on the upswing, and if at all we have to hedge the foreign currency borrowing, then perhaps there's the credit is actually available at much cheaper rates in India. So that is what this is also one of the contributing factor for the kind of credit growth which we are observing.
Okay, Mr. Khara, I wanted to ask you if banks would be stepping on risk to some extent. All the bank results we got so far, brilliant results, but all of them are now getting their cream from unsecured credit. Every one of them almost showed a rise in unsecured credit. Do you think, the period of falling NPAs would be over, and FY24, we could see an inching up?
No, I think as far as NPA is concerned, I would say that the learnings which are there from the past, they have been very well incorporated into the system, and which means that the underwriting has been strengthened quite a lot.
Okay.
And what you mentioned in terms of unsecured credit, though on the face of it, it looks like to be unsecured credit, but the fact remains that there is much more certainty. If at all I can go by my own experience, I would say that the unsecured credit which you do is much better than the secured credit.
Okay. Okay, you'll have a lot of AI, I guess. So finally, would it be right to say that since there is so much of tightness in deposits, as you point out, the year-to-date growth of loans is about 9 trillion, whereas growth of deposits is only 8 trillion. If this is the case, are the best margins behind for the banking sector? Now will we see plateauing of NIMs from, say, fourth quarter?
No, I think when it comes to the repricing of the loan, it happens at a faster pace as compared to deposits. So I don't expect that it is going to have a plateauing effect on the NIM. This is what my assessment.
Okay. Sir, you said that capacity utilization has gone up in the corporate sector. Just wanted to develop a little bit on that. Are project loans coming back in a big way? I'm just trying to understand whether there is more demand for capex. There is an offtake that you're seeing in corporate capex in a big way.
Yeah, we are seeing good traction, and last year we had seen almost about 20 trillion worth of fresh investment coming in. And out of that, about 70% had come in from the private sector. Even this year also, in the first half, we have seen a decent traction as far as the fresh projects are concerned. As in the first half of the current financial year, we have seen almost about 12 trillion worth of fresh investment coming in. Because if you compare it with the 20 trillion last year, so we are certainly on the upward trajectory as far as the fresh investments are concerned.
Okay, that's good to hear, sir. Thank you very much for joining us and for lighting up the summer 2079, both with your presence and your very optimistic comments. Have a great year ahead, sir.
Thank you very much, Lata. Great day.
We'll, of course, touch base with the SBI chairman next week. They announced their numbers on November 5th, a Saturday. So Saturday, we will be able to speak with him. Take a quick break. We are coming back with the pre-opening rates. Also, we will be joined by another banker who's announced some very good numbers. Murali Ramakrishnan, Managing Director and CEO of South Indian Bank, will be discussing his Q2 earnings. Back in a minute.